Tesla stock, Tesla stock, Tesla stock. Boy, oh boy, does everybody seem to have an opinion on Tesla stock right now. A lot of people saying the stock's going to $50 to $60. My gosh, I've released a few Tesla-related videos recently, and I've gotten a lot of comments about Tesla's going to $50, Tesla's going to $60, Tesla's going to $40. A lot of opinions around Tesla right now, and the reason being is it's the stock everybody's talking about. The stock's completely collapsed as of yesterday. The stock was down almost 73% year to date. And this is arguably the most famous stock in the stock market, other than maybe Apple stock, to be quite frank, but it's talked about more, and it's led by Elon Musk. So what we're doing here today is a buy one, get three free here today, folks. And we're going to listen to a lot of different opinions on Tesla. And I want to kind of give my opinion on if, I believe what they're saying is accurate, true, or if it's just kind of completely BS. Okay, first video up here is Gene Munster on what's next for Tesla stock. We'll react to that one. Second video up here, the share price was the downfall of Tesla stock, not Twitter, says this individual. I'm going to have some very interesting comments around that one. I actually watched this clip live, and I was like, that's a juicy one to react to, because there's some ridiculous things that are said in that video, okay? This is a good opportunity to buy Tesla shares. Haven't seen this one yet, so looking forward to reacting to this one here. And then this one I have not seen as well, but it seems like it could be a very interesting video to react to. We see Tesla as a technology conglomerate, says Oppenheimer. So very interesting. Hope you guys enjoy this as always. Thank you everybody for joining me. Thank you everybody subscribe to the channel. I appreciate each and every one of you. We're well over 20,000 subscribers now on this channel. I think we might even be over 20,200 subscribers or something like that. So thank you every single soul that is subscribed to the channel. I appreciate every single buddy, and I hope you appreciate the videos. I appreciate you being here. Let's get into this.
At Tesla, but there's a long-term bull case to be made. Gene Munster is managing partner at Loop, and he joins us on the Fast Line tonight. Gene, great to have you with us. What part of this goes away in terms of, the COVID situation in China and the Shanghai factory getting back up and running? And what part of this is just a more fundamental story about people not wanting to buy Teslas and Elon Musk's image being tarnished and Elon Musk being distracted at Twitter?
I think probably 80% of it goes away ultimately. You outlined some of this vortex of negativity. Musk and Twitter discounts, Shanghai shutdown, used car price in the macro, all of these I think are transitory, to use a Fed term. It can last a little longer than expected, and that's why I think as someone that is supportive and believes that this stock is undervalued here, I think that there still is some near term, and specifically very near term, is the market's going to be on pins and needles related to Tesla until January 1st when the December deliveries come out. The December deliveries are going to not capture the piece of the discounting. 7% discounting might not sound like much for the month of December, but that's going to impact profitability. And so you're going to have I think you'll see a sigh of relief on the delivery number near term, and then all of a sudden investors start to get nervous about what they're going to report in 3 or 4 weeks around the earnings. So we're not out of this. That's why I talk about brace for more negativity, especially given the temperature of the market, and it's a risk-off market. But I would ultimately come back to this question and I forget.
Okay, so he's covering a lot here very quickly, right? One is he definitely mentioned about the stocks undervalued, he feels like here, right? Second piece, obviously, is he's talking about they're in a vortex of just negative everything right now, from the Elon side to the Tesla side to the demand wars. I mean, there's so much negativity around the company right now. And he says prepare for more negativity. I think that's possible, but I don't know how much more rough the negativity can get. I mean, it's been, this stock has had mudslinged on it every single angle you can possibly do it at right now. It's incredible. And so even if, let's say hypothetically, right, Tesla comes in and reports very disappointing numbers for 2023, right, and has rough guidance, has a rough conference call, those sorts of things, there's definitely a huge element of that has already been priced in. Doesn't mean you can't get priced in more, right? We watched Meta stock go all the way down to the 80s, right? Could something like that happen with Tesla? Sure, it's a possibility, right? That is something we got to keep in mind. But what I will say is there's so much already priced into this that if you were to get some bad news and the stock price actually went up, in my opinion, you shouldn't be shocked by a situation like that when you're talking about the stocks down, like as of yesterday, 73% roughly.
Of the panelists talked about this today, but is this a tech company or a car company? And I think that to me is the bigger question. If you think it's a car company, you shouldn't own it. This means that they're going to have minimal market share, that their margins will go away, that other companies are going to catch up to them. If you think they have some sort of competitive tech advantage around manufacturing, whether it's FSD, batteries, that will yield higher margins than typical, and there's a massive a market that they're getting into. So
they're ahead on everything. They're ahead of everybody on everything. I don't care what you talk about, from the technology side to the interiors to literally everything, the battery technology. There's nothing this company's behind anybody else on. The full self-driving, like if you compare them versus their big competitors who people try to keep stacking them against, right? Toyota and Volkswagen and Ford and GM, they're ahead of all those companies. And not by a slight amount, but by an epic amount. The brand, the marketing side, like everything is infinitely you can't even compare these other companies. It's absolutely ridiculous, right? And there's a lot of folks that just refuse to acknowledge that. And I say that's simply denial.
80% of this is a vortex over the next month. I think the bigger question investors should be asking here is this a car or a tech company? If you believe it's a tech company, I think you should own it here despite what the stock is trying to tell us. I think long term it goes higher.
Yeah, that question has been the sort of the existential question facing all investors for some time when it comes to this stock, Gene. But if you think that 80% of the problems for Tesla dissipate, how much of the market cap returns? How much of the multiple comes back?
I think if you think about 2023 and into 2024, I think, this isn't a stock recommendation, but I think that a lot of it does come back. It's right now, it's trading at 2.5 times revenue. That revenue number may be a little bit too high. I think Apple's good comp on the services, hardware, that integration revenue. Apple's trading at 5 times right now. So I think you can kind of retrace. It's not going to get Apple's multiple, but you can retrace some of that gap. And I think, essentially what investors need to see is pretty straightforward. They need to see the delivery numbers. They need to see the profit numbers. We're a month away from getting both of those. I think once we get those, and it shows that the line is still in.
Let me show you guys something extremely, extremely important here, okay? And I have to stop the video to show you guys this. Because if you have studied the stock over time, right? And I know it's hard to even see, kind of like the moves this stock has made. Let's just say since it was a public company. Tesla's a stock, and these are just look like blips on the radar over time. But Tesla's basically how Tesla stock price works is this company goes on these insane epic bull runs essentially, right? And once again, it's so hard to see because the chart's gone up so high over time, right? And it goes on these epic bull runs where the stock will just go to the moon literally, and it's done this probably 3 or 4 times in its history essentially, where it'll make this ridiculous jump in a matter of 6 to 18 months. And then basically what happens is the stock price comes down and it chills sometimes for years, okay? And so remember, Tesla's basically, the last time it was around here roughly was July of 2020, which means the stock really hasn't gone anywhere in 2.5 years. 2.5 years, right? And this is something, obviously, I warned people out about countless times, again and again and again, especially on Millennial Money when we debate, obviously, Tesla stock again and again and again, right? And I would talk about this and bring this up because it has a history of this. When I got in the stock in, I was probably 18, 19, right? 2018, 2019. At that point, Tesla was coming off of 4 or 5 years where the stock price went nowhere. Nowhere. The company made tremendous progress, but the stock price went nowhere. Now, you look over the past 2.5 years and ask yourself, what has Tesla done over the past 2.5 years, roughly? It's made amazing progress. Revenues, margins, profitability, cash flow, factories, new products out there in the market, right? And new products that are coming. Vehicles ramped, much bigger brand, everything is headed in the right direction, right? But the stock price hasn't reflected that. And Tesla will go on another epic run. If I had to predict, it will probably start that run, I don't know, earliest maybe back half of 23, latest maybe back half of 2024. And a lot of that really comes down to the economy and what's going to happen with the economy and how bad it deteriorates or doesn't. If the economy doesn't get too ugly, then you could be looking more at that back half of 2023 when this starts its next big epic run, which will mark about 3 years roughly of basically the stock going nowhere, right? Or potentially even being down. I think that if you're talking about a rough economy, a bad economy, then you're probably not looking at a big bull run until maybe like back half of 2024 in that sort of scenario, in my opinion. And you can study the stock over time. It has a history of doing that where it just goes absolutely to the moon and then it chills and doesn't do much for quite some time.
about the adoption curve, I think that the multiple can have some form of a rebound.
Hey, Gene, it's Steve. So I'm going to ask you what Melissa asked us. What do you think in 3 years out? I'm going to play Would You Rather in an A block, virtually unheard of, with Gene Munster. Would you rather Apple or Tesla 3 years out?
I would say Apple, and the reason is, to this idea that Apple is going to get into the car business. I think Mark Gurman from Bloomberg does a great job of covering this, and he's been spot on. If you read his published works, he thinks they're going to do a car. If I'm not willing to say that right now, but if they do get into the car business, that probably has a positive impact. I mean, they could double their revenue over the next 10 years based on a car business. And you probably have some sort of competitive pressure on Tesla. So I think both of these are going higher. It sounds like out of touch with reality reasons on Apple. I think they have business, but I still think they're getting into segments that are far from price.
Okay, so first off, in regards to this whole Apple thing, okay, ask yourself this. I think it's a very important question. What has Apple done big since Steve Jobs passed away? Nothing. Absolutely nothing. They haven't had any game-changing products since Steve Jobs passed away. Everything that company is still accomplishing to this day. What is Steve Jobs has been gone, 12 years now? 11 or 12 years, something like that, right? Everything that the company has going on is all stuff Steve Jobs set up. The services side of the business, right, with the app stores, the iPhone, the iPad, the Mac business, everything that generates that company significant money is all stuff that Steve Jobs set up, right? And in terms of their headphone technology for like AirPods and stuff, like they acquire Beats to obviously help huge on that side, right? And so if you look at this company, the closest thing to like a big product is, I guess, Apple Watch. But Apple Watch, give me a break. If like Apple Watch is nothing, literally nothing compared to what Steve Jobs set up between, the iPhone, iPad, Mac businesses, services, and all those sorts of things. Okay, so the closest thing is Apple Watch, right? And so is Apple the type of company that can change the game? So far, they haven't proved they can change the game without Steve Jobs. That's fact. That's not opinion. That's a fact. And so to assume that Tim Cook can compete with Elon Musk, I don't know about that. We have never seen it. We've never seen Tim Cook do something so big and so grand and so, oh my gosh, can you believe this? And it becomes this insane business. We haven't seen that yet. And this is coming from somebody that's owned Apple stock and made money on that stock in the past. And obviously Tesla was a game changer for me, right? And so I don't know. Like I think that's just important that everybody assumes like Apple can just do something huge. And it's like, since Steve Jobs unfortunately passed on, they haven't done anything huge. Not one thing. Not
the
one.
Apple shares right now.
Gene, just quickly, because we're out of time. If Elon Musk reduces his role at Tesla, maybe becomes chairman or something along those lines, does the stock go higher?
Yes, I think it does, just for the simple fact, it's reassuring to investors that he's putting his attention. I think that just helps investors sleep well at night. Investors sleep well at night, multiples go up.
All right. Gene, great to have you. Thank you. Happy New Year. Gene Munster.
Yeah, in my opinion, Elon Musk needs to step down from Twitter, not from Tesla. A lot of people assuming it'd be good if he stepped down from Tesla. I mean, the company's set up. He's set Tesla up for the next decade, similar to how Steve Jobs set Apple up for basically the next 10 to 15 years. Tesla's set up now for the next 10 to 15 years. With that being said, I really want Elon Musk to continue to lead this company over the next 10 to 15 years. And I'd much rather have him leading Tesla than leading Twitter. Let's put it that way. Yeah, and I think Elon Musk knows where his biggest opportunity is, and we all know it's Tesla, right? The good old Tesla Model.
Loop Ventures. Victoria, your thoughts on that very question. Is the company better off without an Elon Musk now?
I don't know. That's a tough question. I mean, he is Tesla. And so when you think of Tesla, you automatically think of Elon Musk. You think of the genius that he has and the innovation that he's brought. So I think that's kind of the competitive advantage that Tesla has right now. Does that wane if he's not there? Maybe, I'm not sure. I mean, I would rather see him reduce his role at Twitter, come in and take that main role again over at Tesla and give some support to that stock. Like I said earlier, fundamentals aren't supporting the pricing that we're seeing. Maybe if he gives more attention back to Tesla and gets that innovative component back there, perhaps we see a little bit stronger fundamentals there.
All right.
Yeah, I mean, I don't know about the whole innovation thing and oh gosh. I mean, there's so many things that Tesla's working on right now that people don't even get to see. That's all I'll say about that. I'll just leave it there, okay? The share price was a downfall of Tesla stock, not Twitter. Let's get into this one here.
Story in the market, it's Tesla. Right now, it hits another new low. The market cap has fallen now below Walmart and JP Morgan. That's stunning in and of itself. If you consider where it started this year, Joe, it was north of $1.2 trillion, okay? Now, it is, as I look at it now, it is like $355 billion. That to me is emblematic of the story of the year in the stock market itself for stocks like that.
Without question. The beginning of the downfall for Tesla was in early April when Elon Musk announced the stake in Twitter. At that point, the stock was 10% higher on the year.
Not 10% higher than where it is now.
10% higher
in the
on
green.
the year. In the green.
For the year.
Subsequent to that, in 4 separate stock sales, Elon Musk has sold $23 billion worth of stock. Now, he's tried to defend the stock. He has split the stock. He has dangled a stock buyback. He has said he will no longer be the CEO of Twitter. He's attempted everything he possibly can. What he cannot do is he cannot defend against the massive ownership that existed in this company. And unfortunately, for those that do own it, the cost of capital has changed so dynamically that ownership is being liquidated in what I think is one of the most dramatic equity liquidations I've witnessed since 2000.
So momentum is a powerful thing.
Powerful.
Up and down. Now, you own the stock.
We do.
Through the Joe T ETF.
Correct.
Now, if I'm a betting man, and sometimes I am a betting man, I'm thinking that when you rebalance, which is coming at the end of the year, and we're going to find out shortly after that what
end of January
current holdings are, that Tesla may not be in the Joe T. Can you give us an idea, if you're able to, on how you're thinking about this right now?
I'm going to give you my best Bill Belichick. I'm on overtime the last day of January.
So you're on to Cincinnati, in other words.
Correct.
You're not talking about it now, and it's, I'm sure, because just from a regulatory standpoint, I would imagine that you're not able to get into any sort of key details about that. However, Jenny, how are we supposed to think about what's happening here as it sort of relates to the overall narrative in the stock market? Because I think they're tied together.
I think so. And actually, Scott, as I was driving in, I was listening to the radio, and you said something that was so smart that I texted it to myself so I'd re-quote it. You said, we are re-rating everything because of what lies ahead. And that, to me, that sentence encapsulates everything that's going on. That's Tesla, that's Peloton, which is what I think you were talking about. It's the reason energy is up. It's the reason utilities are up. Everything's being re-rated.
Come on, man. Come on. We don't throw Tesla in the same sentence as Peloton. Come on, man. Like, I get the point, but just no, okay, please, jeez.
It's not all in one direction. It's not all negative. Some of it's quite positive. But when we look at Twitter, when we look at Tesla, where I disagree with Joe a little bit is it wasn't Twitter that created the downfall. It was that the share price never should have been what it was. And that brings me back to that Charlie Munger quote, which I'm going to completely botch, which is something like any wonderful company can be turned into a terrible investment simply by driving up the share price too much. And that's what happened. That's what happened over the past several years. These share prices just got...
You think Twitter had nothing to do?
Twitter was a catalyst that accelerated something that had...
Okay, so there's two frames of thought. Yes, on the short term, absolutely. And I'm in a total agreement of this, and I'm somebody that spoke about this time and time again in regards to Tesla, that if you're looking at it from any shorter term perspective, right, which is like a 2-year perspective or less, there's no doubt Tesla was definitely massively overvalued, right? And now it's, in my opinion, massively undervalued. But the other important thing, I think, to keep in mind for all folks out there, right, is right here, Tesla stock was massively, epically overvalued, okay? And the stock went on to fall 90% or so, Amazon stock, right? And even then, you still made out amazing. Like, even people that were buying, if there's any poor souls out there that bought Amazon at the peak, literally the peak of the tech bubble, and then went on to go down to 90%, they still made a sickening fortune on Amazon stock, right? Because obviously Amazon was one of those game-changing companies that went on to become a giant, right? And that's the same way people view Tesla, right? They've proven enough already. And Tesla's actually much, much more proven than Amazon was in the tech bubble, right? Amazon was, honestly, in the tech bubble, Amazon was a joke compared to the Tesla you see in front of you today. You can't even really compare those two companies, right? But nonetheless, even those folks made a fortune, right? Never mind all the folks that obviously loaded up on the stock over the coming years as it was down, even as it was up, and so on and so forth, right? So I think that's an important piece we're all forgetting. Everybody has very much recency biased in the stock market, and whatever they see in front of them, they think is going to continue on, or that's the right way, right? And so people look at a stock like Tesla and they think, oh, it's going down here in the short term. It means it's a bad stock, and it doesn't mean that at all. You got to understand, even the people that bought Tesla at the peak, okay, when even somebody like myself felt like it was definitely way overvalued on the short term, and we talked about that a million times in the past, right? Even those people could end up making a lot of money on Tesla stock. It's not going to happen tomorrow or next month or even next year. But over the coming years, even those folks that bought at the very peak could potentially end up actually making tons of profits and getting the last laugh in the situation. Never mind the people that are going to buy all as the stocks, kind of down and out over the next, let's say, 6 to 12 months or whatever, right? And so I think that's important to remember, and very important to factor in. These sorts of game-changing companies, every time you think, oh, they can't grow much bigger, we got to remember, Tesla's still early days in their growth. Early days. Tesla just launched their first mass production vehicle in big production like 4 years ago. First of many. And they haven't even launched their highest production vehicle yet. They haven't even shown that off yet. The vehicle that's going to sell 5 to 10 million a year. They haven't even shown that off yet. Their highest production vehicle probably hasn't even gone into production yet. Cybertruck. Man.
Happen.
Okay, so if the stock was standing at the edge of the cliff,
something else.
It was Twitter. No, it was Twitter that pushed it over.
No, because
I think you guys can both be right.
I think you're right.
I think you guys can both be right. I think Twitter was the most recent episode to puncture one of the tires, but the car was already in trouble because of where we are, what the Fed is doing, and as I said this morning, what lies ahead still.
I'm sorry, I disagree with both of you. The stock was 10% higher at the beginning of April. The market was already down. There was a degree of resiliency built into the stock.
There was, but only into the stock price. The thing is, it was trading back then at 10 times the collective value of every single automotive company in the world.
Some people think it's a tech company.
Okay, but it just didn't make sense. At some point, the future cash flows need to justify the current valuation. And there was no version of Tesla at its peak that was ever justifiable, not for 30 years of growth. And so that's what's happening. And that's
ridiculous. Damn it. I can tell this lady hasn't even run projections on Tesla 30 years. Come on, in all due respect, it's just ridiculous, man. But like I said, a lot of people are just throwing out random stuff now at this point in time. And I can tell the people that are educated on the stock versus the people that are just throw some stuff out. And when you go to stock very popular like this, everybody wants to give an opinion. It gets asked these questions, right? And I guess I shouldn't blame them, but it's just when you're super up on a stock, right? It's frustrating to have to hear these opinions that many times are just ridiculous. She just throws out there. At its peak, it was pricing in 30 years of growth. It's no, not even close to that. Okay, if you're judging off short-term metrics, absolutely the stock was overvalued, right? But it's not 30 years of overvaluation. It was pricing in. If you run any sort of normalish projections, never mind even the more bullish scenarios, which is a whole different vector.
And it came down. It's just reconciling. The whole year is about reconciliation.
Yeah, I think that's a fine way to put it.
There's one more thing, Scott.
Go ahead, Michael, because if I'd have told you at the beginning of the year when Tesla was in the $1 trillion club with the Microsofts and the Apples, and I said that at the end of the year, it was going to be in the Walmart club with a market cap that obviously is respectable. Any company would be respectable to have a $350 billion market cap. But if I'd have told you that it was going to go from 1.24 trillion to 355 billion, you told me I was crazy.
Not me. I would have said you're smart.
Okay. All right. We'll move on from that one. Okay, next one up here. This is a good opportunity to buy Tesla shares here.
Well, horrible, no good, very bad, everything on pace for its worst ever month, quarter, and year. Joining us now to talk about what is going on is CFRA Senior Equity Research Analyst Garrett Nelson, who's got a buy rating on the stock and a $225 price target. Garrett, great to have you with us. I assume at this point you stuck with your buy rating this whole time down. I mean, it's down 69.
By the way, the thing that sucks for Tesla stock is they, in the short term, they're going to have to go through tons of analysts bringing down their ratings, buys to holds and holds to sells and sells to strong sells. And you know, analysts are always playing catch up. They're always playing catch up to wherever the stock price is. They're going to have to bring down their target prices. They'll probably have to bring down revenue numbers. So analysts in general always playing this game of catch up, and they're going to have to continue to play this game, unfortunately. And that could be something that weighs on Tesla stock short term. But if you're a buyer of Tesla stock, obviously you're going to take every discount you can get over this next 6 to 12 months.
This year, I would assume you think it's closer to the bottom at this point. What is the primary driver of this tremendous decline that we've seen in your view?
Sure. Thanks for having me. So obviously there's been a lot of attention surrounding Tesla's sell-off, but to be clear, this is a broader EV sell-off. If you look at Tesla's competitors, Rivian and Lucid, those stocks are down far more on a year-to-date basis than Tesla. So, we think sentiment has...
and he brings up a good point, but at the same time, like to say their competitors, Rivian and Lucid... It's just laughable. Like, if anybody that's very educated on this industry and these companies, just like, all you can do is when you hear things like that is just laugh. It's just ridiculous, man. I don't even know how to explain it. It's like saying BlackBerry is a competitor to Apple. It's just like, what are we talking about here, man? Or Motorola. Motorola is a competitor to Apple. It's like, sure they are, but it's ridiculous, man.
Become overly negative. And the recent sell-off has really been exacerbated.
It's worse than saying eBay is a competitor to Amazon. It's like, that's true, but those companies aren't even remotely close to being even in the same category as companies you can compare versus each other, right?
Year-end tax loss selling, in our view. But if you look at what happened yesterday, Tesla lost over 11% of their market value in a single day yesterday. And really, what news was there out there, except that they're planning to take little additional downtime.
By the way, and I've spoken about Lucid a few times in the past. It's definitely a company that could go BK, like literally to zero. I would call it probably a better chance they go bankrupt than make it through. And the reason being is they just need so much capital over this next couple of years if they're going to make it. And it's a horrible, horrible time to try to raise capital. So, if Lucid makes it through this mess, it's going to be, in my opinion, closer to a miracle than not. And I think their product looks intriguing, but it looks like their cash burn is just way too heavy, and their balance sheet. And the CEO's been on record several times saying that they're going to need to raise a ton of money. Whew, it's the worst time to raise money. It's worse than the Great Recession, I feel like, right now, in terms of trying to go raise $1 billion or a couple $1 billion right now. I mean, it's awful. Not right now.
Shanghai factory over the Chinese New Year in late January. And so we think that's really overdone to see that kind of sell-off on that type of news. And by the way, their China factory is only one of 4 factories that they're currently operating. So we think this is a really good buying opportunity following the recent sell-off.
What was remarkable about yesterday's sell-off was the volume behind that 11% decline. So it wasn't just, strange light volume days ahead of the new year, Garrett. It was, 3 times the average daily volume over the past 30 days, which means that there's a lot of conviction in that decline. If you think that it's China mostly, that bit of news behind the 11%.
The point I want to make that I think is very important, and I want to make this point before I forget, is there can be a very big difference between what you're feeling is going to happen with a company short term versus your feeling long term. I think if you've been watching a lot of my videos, you know I'm not necessarily bullish on Tesla for the next year. I think their numbers could miss analyst estimates. I'm not super bullish on the next year for Tesla numbers. But with that being said, I'm incredibly bullish for the long term, right? So which means this next year could be an incredible opportunity where I'm able to add shares for the first time in a long, long time, right? And so that's what I'm going to use this kind of next year is just to build out a nice sized Tesla position, because I sold most of my Tesla shares over time, right? Like the far majority, I have hardly anything compared to what I used to have. And so now it's going to be my chance over this next year to build back up that position into a large position to kind of take me into the next, let's say, 5 years or so in regards to Tesla, right? And so you can be bearish on a company in the short term and super bullish on the long term. It doesn't mean you shouldn't be buying that stock in the short term. A lot of time, those are the best opportunities to buy. Because if you're super bullish on the next 5 years, but the next year is rough, well, guess what? The stock price is likely going to be in a bad place for the next year, which means you can add those shares for obviously huge discounts. And then if you're right about the next 5 years, obviously you're going to make out very, very well in that situation, right? Something to keep in mind there.
Once that gets better, I would think that that's something to look through. But then you still have the outstanding issue of Elon Musk's distraction, the possible damage to the Tesla brand, the high interest rates, which Elon Musk himself tweeted about. I mean, the Y and the 3 are some of the most financed SUVs, EUVs in the market, I should say, at this point. These are things that don't necessarily go away, even if the China lockdown is solved. And we just heard from Dr. Scott Gottlieb earlier. He thinks that, this could be waves and waves of COVID here, which could still be disruptive to the supply chain.
Yeah, we think the pendulum has really swung too far in the direction of fear. And Tesla is not being given enough credit for some potential positives that are ahead. One is we think they could announce a buyback. They've alluded to that in the last few months.
That, as a Tesla shareholder, no. I don't want Tesla buying back any shares. I'm sorry. No. Okay? No. I'd much rather forget the buyback. It's a joke. Like, forget the freaking buyback.
Likely be in the magnitude of $5 to $10 billion.
There's a lot of $5 to $10 billion. It's nothing. Okay, there's a lot of companies that I would love them to do buybacks, right? Including a lot of companies I own. Tesla's not one of those. I could care less. Like, not even 1% do I care about them freaking doing a buyback. No.
The company's balance sheet was recently upgraded to investment grade by S&P. So they're really in a lot different situation than other automakers, given their balance sheet strength and free cash flow. And the other thing is that their EVs, the lower price versions of the Model 3 and the Model Y will become eligible for $7,500 federal.
Has anybody even accounted for that? Let me ask you this. Has anybody even accounted? And shout out, if you're still watching this video at 32 minutes and 22 seconds, leave me a comment down there, okay? Just say 32-minute squat or something like that. I always appreciate the people that join me deep, and I always try to bring you guys value because you watch, obviously, the videos all the way through. Has anybody even accounted for the fact that if we do have a very ugly recession, that a lot of automakers are going to go through bankruptcy? Look back to what happened in the great financial crisis, right? Many of these auto manufacturers are massively leveraged, okay? Massively leveraged. Huge loads of debt on some of these companies, right? Many of these big, huge automakers. And if these companies go through bankruptcy, you know the disruption that's going to happen in their business models? How the hell are these companies, how the hell can Toyota and Honda and Ford and GM and all these other companies dream to compete with Tesla in a normal economy? Never mind if they're having to go through bankruptcy or anything even close to being like, oh crap. Because here's the thing, if they start all of a sudden losing tons of money, right? Because remember, a lot of those other auto manufacturers run on razor thin margins. If those other auto manufacturers have to even come to like, hey, it's possible, what do you think they're going to have to cut? They're going to have to cut their EV research and development. That's what they're going to end up having to cut because that's where they're spending the big money right now. And if they have to cut that, then Tesla's lead just continues to grow exponentially bigger and bigger and bigger, right? I mean, these companies, it's going to be a miracle if they can compete with Tesla just if they don't go through that process. If you're talking about they have to even face the possibility of bankruptcy or even have to go through that process, they stand 0% chance. I mean, going against Tesla as it is, they stand maybe a 10% chance. Going against them, if you're going through bankruptcy or something close to that, you're taking your odds down to pretty dang close to zero at that point, right? So I think that's something that's very important that's not talked about enough right now. But it should be, and it's a serious thing.
EV tax credit on January 1st, so next week. those lower price versions will be available for the EV tax credit because of the Inflation Reduction Act. And so, we don't think the market is focusing enough on those things. And, this sell-off has really presented a compelling entry point.
Right. That tax credit is huge. Garrett, great to speak with you. Thank you.
Yep.
Garrett Nelson.
Next up here, we see Tesla as a technology conglomerate. Yes, indeed. And I don't do a good enough job talking about Tesla's energy side of their business, just to be quite honest, right? I mean, there's just so much. For me, there's just so much on the auto side that's just insane, right? Just the amount of vehicles they're going to sell over time, the ASPs of those vehicles, how much growth they just have in their auto business in general, the services business, right? Maintenance of the vehicles, Tesla auto insurance, supercharging network, right? Like I said, like the $10 a month plan for premium connectivity in the cars, right? The full self-driving for $199 a month. Like all these, like the auto business in itself is just so massive that sometimes I don't even respect or give any recognition to the energy business, but that business has been growing very rapidly. And you listen to Elon Musk talk a lot about that business and the growth rates and how it's way outpacing. Many of their energy products are way outpacing auto sales growth by a large margin.
I know you joined us earlier in the month when you downgraded to perform on this name. Your thoughts given the activity, given the fact that, to Amy's point, you have seen some more headlines that speak more fundamentally to the business in recent days as well. Your thoughts on Tesla at these levels currently?
So there's a couple of really interesting things as we wrap up the year and get into 2023. First, this is going to be a year when the pretenders and the real contenders get washed out in the EV space. And so I think one of the things that we've been excited about with Tesla is just the technology leadership. And so as we look at that and look at how many folks really are going to buy EVs and what those unit economics look like, we see Tesla in a very strong position, and that has been a consistent view for us. Now the concern here is that as you have more options on the market and you have some incremental competition for Tesla, and you have Elon out, in and around Twitter, changing the consumer perception of the brand, that some of those folks decide to make a different choice away from Tesla, despite the product being advantaged versus some of their competitors. And that's the thing that really has been a concern for us. And so as we look at these fourth quarter numbers and kind of the intensity that we always see at the end of the quarter for Tesla, it's going to be very interesting next week when we see those results to see how many cars they produced and how many they actually shipped. And then as we look into the first quarter, we're going to be tracking very closely what happens in China as some of the rules shift in terms of the tax credits and other support that we've seen for the EV space, in the early part of the year, and how the sell-through actually works.
As we've seen the stock sell off, it's raised the question again of whether Tesla should be viewed as a tech stock or as an automaker. How do you see it?
There's, I think, three elements of the business. One is a material science company that's really done an enormous amount of innovation. And I think one of the things that got missed in the past week was the run rate on the 4680 production. I think that's a very big deal for this company as they move to a new battery and what it does in terms of range and performance for the vehicles. The second piece is the auto company. They're making cars and they're making specifically EVs. And that's the core part of the company. And then the balance of this is really around AI and what they're doing in terms of navigation with self-driving vehicles and all the other applications for AI. And so we really see it as a company that's really built on those three pillars. You could throw in the solar piece of it, but that seems like a sidelight at this point. But I think it's really more of a technology conglomerate that's solving some very, very important problems and very difficult problems, and has a corporate culture around innovation and meeting the challenge. And so we see them as more of a technology conglomerate, as I said here.
Yeah, something Tesla doesn't get nearly enough credit for is their workforce. I mean, I've been fortunate to know some of the Tesla engineers and folks that work at that company over time, and definitely, among the most intelligent people I've ever met in my life. I don't want to say their workforce is better than all the other Silicon Valley companies, whether you're talking about Apple, and obviously Tesla now is more of a Texas company, I guess you can say, but they've obviously snagged so much talent from that area over time of Northern California, right? And I don't want to say necessarily their workforce is better than Apple or Google or Meta or their other competitors, right? Which those are their real competitors in my personal opinion. It's not Ford and GM. But I will say, if you aren't going to say they have the best workforce, they certainly have one of the best workforces in the world, right? And so what do you pay for a company, right, that has a visionary CEO who has a track record of multi-decades of executing on big grand visions and making those a reality, with a workforce that might be the most incredible workforce on the planet? And if it's not number one, it's certainly one of the top, let's call it 5 or 10 workforces, right? Obviously, Elon Musk believes it's the best workforce in the world, right? So what is that worth, right? What is that worth? A lot of humans working together to solve massive, big problems?
Really, the cash flow is really being driven by the vehicles, and so it's hard to separate out that cash generation from the auto market at this point.
Yeah, Colin, you referred to what goes on at the end of the quarter as the intensity around quarter end. So essentially trying to make, presumably, their volumes, and there's reports of these incentives to actually try to buy a vehicle by the end of the quarter. Does that place the 2023 consensus of close to 2 million vehicles sold at risk, the fact that it seems as if they're having to stretch, or do you think that that's a pretty comfortable number?
It's a number that I think is fair at this point. I think we need to see what the real rules are around the U.S. tax credits. Some of the sell-through in Europe is electricity prices are a bit higher than they have historically relative to diesel, for sure, as well as the implementation of some of the rules around zero emissions vehicles in certain EU cities. And I think this 2023 thematic is going to be around testing the market for EVs. You've heard a bunch of stories around folks that couldn't drive their cars because of the cold around Christmas. That's pretty disappointing for a lot of vehicle owners, and it's going to be a warning for folks to buy new ones. But I think this is a real test year that we're coming into, and so I think that the 1.92 million vehicles is a fair number for Tesla. But the question is around what's the cash flow to actually push those vehicles into the market. And the question for us is really around incentives for marketing and these discounts that we're hearing about. That gives us a little bit of pause around what the cash generation might ultimately be. We still think they generate an awful lot of cash, but it's just not going to be the upside numbers that I think some folks had hoped for.
Yeah, so that was interesting. He mentioned there about some of these videos that went viral on TikTok recently with Teslas in the cold and either supercharging failed some guy or getting in the car or something like that, right? And it's interesting. Tesla always makes the news for everything. Like if Tesla has a fire, it goes viral on the internet, right? When normal ICE internal combustion engine vehicles catch fire every day, like multiple times per day. Like, look up the statistics around that, right? And yet a Tesla, it happens, it makes news. A Tesla gets in an accident, it makes news. Why all the other vehicles get in accidents every single day and people get injured and die and all those sorts of things. But a Tesla gets in an accident, suddenly it's massive news. And so that's, at the end of the day, it is marketing, I guess you could say, right? Free marketing, whether it's negative or positive or however people want to look at it, it's keeping the brand out there. It's just funny that it's always so newsworthy when it involves a Tesla, right? It's just, that's always been the way it is, and it still is the way it is, right? So, I've seen a lot of people recently try to compare this company with Toyota and Ford and GM and Volkswagen and the valuations of those companies and trying to say Tesla should be valued somewhere near those companies, right? One, those companies don't have the growth rate Tesla does, so that's ridiculous. The second component is the workforce. They don't have Tesla's workforce, okay? The third component is they don't have a 5-year plus lead on all their competitors like Tesla does, right? The fourth thing is they're all trying to convert their business models to EV wave, right? Well, Tesla's already there, and if you're going to consider an EV, you're always going to start your conversation with Tesla, and then you're going to have to choose another vehicle on purpose rather than a Tesla, right? No, it's very similar to in the United States of America. If you're going to consider getting a smartphone, you're always going to consider, almost everybody is going to consider getting an Apple smartphone first, an iPhone, right? And then from there, you're going to have to make a decision. Do you want to get something else, right? Do I want a Samsung or an HTC? Do they still make phones? Like, I don't even know who else makes phones, to be honest, right? Because I've been on iPhone since 2013 or whatever, right? And so the conversation starts there, and then you have to choose if you're going to get, same thing, if you're going to choose to get an EV, right? Whether it's going to be, obviously, a pickup truck when Cybertruck hits the market, an SUV, which is obviously the X and the Y, or whether it be a sedan, which could be the 3 or the S, right? You're going to always start with those products, and then you're going to work your way backwards and see if you can get something, right? And so, I mean, I just usually if I see people try to compare these other traditional OEMs to Tesla, it usually shows me that they just haven't done the research, or they're just refuse to acknowledge like the reality, and they want to just be in this kind of like fairy tale land of their own place, which is, if they want to do that, respect to them, that's their own decision, right? So anyways, hope you guys enjoyed today's video. As always, if you are still watching this video, say, you know, comment 44-minute squad, okay? I appreciate everybody joining me as always. Sometimes I never know, you know, this is a very long video for the reaction channel, so I don't know who's still rocking with me. I try to bring value throughout the entire video, so if you're still here, comment 44-minute squad. I appreciate you. Much love as always. Thanks for being subscribed, and have a great day.